markets are selling off this morning. Take a look. Futures indicating a decline of 425 at the opening of trading this morning on the Dow. The Nasdaq is down 262. That's better than 1%. Of course, it has been the Nasdaq and tech that have been leading this rally in the last 2 months. Apple this morning is higher. Take a look at shares of Apple right now after the company reported its strongest revenue growth since December 2021. The stock right now up almost 2%. iPhone sales were up 13% in the quarter. Overall revenue up 10% at Apple. CEO Tim Cook says the company is ramping up its AI investments with an AI strategy and that it is open to acquisitions to accelerate that roadmap. Apple's China performance showed resilience. It was showing sales up 4% in China. Meanwhile, a different story at Amazon. The stock is selling off right now. It is down almost, 8%, 7.5% lower on Amazon. The company issued a cautious profit outlook, even as second quarter sales were up 13%. Sales coming in at $167 billion. Amazon Web Services recording 18% growth. 18% growth. But it is facing competition as Microsoft and Google report faster cloud expansion. Now, we're waiting on Chevron. Earnings there out any moment. ExxonMobil also on deck. We'll get you those Chevron numbers as soon as they come out. Joining me now, getting ahead of it, is Federated Hermes Chief Investment Officer of Equities, Stephen Auth. Stephen, great to see you. Thank you so much for being here. I want to get your take on the overall market as we see the month of July capping a great couple of months on the heels of the lows reached in April. As we await some more earnings this morning, Stephen, your reaction?
We're still bullish, Maria. As you know, we have a 6,500 target for this year. We're getting closer. It didn't look kind of crazy a couple of months ago, but and then we've got 7,500 the year after. We think we're in a bull market. We've had a big run off the lows. At that point, you normally get some kind of consolidation. Our view would be instead of a big correction, you may get more of a broadening out kind of rotational type market. And you can see it even, today with the reaction to what are pretty good numbers out of Apple and Amazon. But, the tendency, Amazon in particular, had run into this, Apple had run into this. So you're seeing a little bit of a softness here off of those stocks. But we think the spending number showing up on those earnings reports is indicative of what we're seeing everywhere else, that corporate America continues to power through despite all the doom and gloom out there about the tariffs. And, we've just been impressed by how economists, the Fed, are so uniquely focused on just the tariffs. Maybe that's because they grab a lot of headlines, but there's so many other parts of the Trump package that are pro-growth, pro-economy. And with all this uncertainty now past us, we think there's a sort of bounce you get psychologically in the back half of this year and into next that's going to cause a reacceleration in the economy. Earnings continue to go higher. The Fed's going to be cutting whether Powell knows it or not. And, so it looks like a pretty good backdrop to us.
Yeah, well, certainly the backdrop has been real positive for business. Stephen, you're right. Chevron numbers just coming out for its quarter. It's a beat on both earnings and revenue. Earnings coming in at $1.77 a share versus an estimate of $1.70. Chevron reporting revenue of $44.82 billion versus an estimate of $43.8 billion. Second quarter cash from operations beating estimates as well at $8.6 billion. This just on the heels a couple of weeks ago of Chevron closing that mega deal for Hess after winning the Exxon arbitration. We spoke with Mike Wirth at that time, the CEO of Chevron, and he gave us an outlook for the second half. And to your point, here's what he said. Watch.
Well, let me start with the Gulf of America. We started up a big project last year called Anchor, mid-year. Earlier this year already, a second project has started up called Whale. A third project will start up mid-year called Ballymore, which will take our production in the Gulf from 200,000 barrels a day in 2024 to 300,000 barrels a day in 2026, so a 50% increase. We're going to see a 10% increase in production in the Permian Basin, again, after the last 5 years, a 16% compound annual growth rate over those 5 years. So production in the U.S. will continue to grow. We also started a large project in Kazakhstan earlier this year, which will take a field that produces about 700,000 barrels a day to nearly 1 million barrels a day when it's at full capacity. And so we've got strength in the U.S., we've got strength overseas, and that's all part of a very positive outlook going forward.
So, Stephen, he's saying that second half of the year looks good. You made the point in your note to clients that you're seeing an increasing number of investors joining the fray. Increasingly, people are saying, look, this market looks good, I want in.
Yeah, I mean, there's, as you know, Maria, I mean, there's a huge pile of cash on the sidelines. This has been the rally that everyone hates. People went to cash in the sell-off, unfortunately. And now, you know, you're always have natural resistance to the rise that follows until you finally cave. And what you just saw from Chevron there is a lesson in supply-side economics that I really wish the Fed was listening to. Because really what the Trump package is, if you want to think about it, is a modest increase in consumption taxes, partly paid by foreign importers into the U.S., in exchange for a tax decrease on investment. The One Big Beautiful Bill has all these accelerators in there for CapEx. And that is a much more efficient way to grow the economy, because once you start investing, you get a multiplier effect.
Yeah.
So this is supply side economics, you know, which a lot of economists don't get trained in, they don't understand, but you're going to see it come through in the numbers over the next 12 to 18 months. And, you know, that makes us pretty optimistic. And as you said, there's a wall of cash on the sidelines waiting to get into this market.
Yeah, I mean, I guess it's $7 trillion in money market funds. So what do you want to say about the president's new sweeping reciprocal tariff rates taking effect August 7th, rates ranging from 10% to 41% on 68 countries in the European Union? That includes a 10% universal tariff on imports into America, which goes to 15% for countries with a trade deficit with the United States. It spikes higher for about 15 countries, Stephen, and they're facing additional penalties. The president raising the tariff on Canada, for example, to 35% over its role on the fentanyl crisis, and he's extending the relief from Mexico by 90 days. So lots of different plans here. We're going to talk with Jameson Greer about it. But the Federal Reserve keeps saying we're waiting and waiting and waiting for the tariffs news to hit inflation. It's not happening.
It's not happening. And Maria, all the headlines aside, if you do the math on the tariffs, the average tariff rate right now is looking like it's going to end up being about 13%. Remember, when you hear Canada tariffs, Mexico tariffs, those are for non-USMCA traded goods. And the bulk of goods should be coming in under USMCA, in which case it's tariff-free. In the case of Canada, they're probably shipping more non-USMCA right now than they should be, but he's really trying to discourage that. So the headline sounds horrific, but when you do the math, it's about 13%. You figure about half of that's going to be paid by the foreign importers, so it's like a 7% sales tax on 15% of the U.S. economy. It's not a big number, and it's not worth. And it gets, by the way, bled into the numbers over the period of probably the next 6 months. So it's going to be almost indetectable. And so far it's been indetectable. So every time it comes through indetectable, they come up say, well, it's coming next month. But it hasn't been there. And so we don't think it's something to get that worried about.
All right. And it certainly feels like that's how markets are feeling as well, despite today's sell-off. Stephen, always a pleasure. Great to see you, sir. Thank you. Stephen Auth.
Likewise, Maria.
All right. We'll see you soon.